Hey, everybody, welcome back to the show. Super excited to have with us today Rick Brimacomb, who is the founder of Brimacomb, which is the consolidation of three different businesses, really, that he has and brands under one name, a Minneapolis-based advisory firm, a venture capital fund, and an entrepreneur club. Rick, welcome to the show. Super excited to have you here.
Kip, thanks for having me. Appreciate the opportunity and look forward to catching up today.
Oh, absolutely. Well, maybe let's start with your origin story. Just a little bit of background on who you are and how you came to do what you do today.
Sure. I think everybody's story would be the family of origin because you're shaped by your parents. My parents came from a small town, Austin, Minnesota, southern Minnesota, came up to Minneapolis to college, stayed here. And so kind of familial roots, kind of small town. And then my father, definitely a self-starter, first guy in his family to graduate from high school, go on to college, go on to dental school. And so I'm very much about personal responsibility and personal
Mhm.
growth and walking to your own drummer.
No, very good. How about we talked about, just Brimacombe really being the three different entities or brands that you have. Maybe chat a little bit about, what makes up Brimacombe today.
Sure. So I guess tying it into my story, way back when I did investment research, telling people what stocks to buy or sell. So analyzing companies was the core skill that I learned back then. And then went into investment banking, learned how to raise money, sell companies. So packaging a deal and selling a story and knowing what stories will sell or not was another skill I learned. And then I went into venture capital and growing businesses, junior guy at a big fund. And back at that big fund, they did both private equity and venture capital. So I have a personal philosophy that have characteristics of both styles of investing. And that has led me to where I'm at today. I have a platform with kind of three different entities. And if you think of a marketing funnel, at the top of that marketing funnel is Club E. It is a content and networking platform. In the middle part of that funnel, I have my partnership business where I'm advising businesses, going on boards. And then at the bottom of the funnel, I have a venture capital vehicle called Brimacomb Capital. I've invested in a current portfolio of about 11 companies, put in a couple of $1 million, and those businesses now have raised north of $100 million. So I've done a pretty good job of identifying businesses that have strong growth characteristics. And so I'm looking for things that downstream bigger funds will invest in. And that's what I'm doing today, Kip.
Oh, very good. How about what for your investments, what strategies have proven most effective for identifying and capitalizing on high growth opportunities for you?
Sure. Well, back when I was at Norwest Venture Capital, as I mentioned, they had both private equity and venture capital under the same roof. And back then, that was a fairly common occurrence. And if you think of private equity, those people are interested in finding undervalued assets. And then the venture capital people are more about growing things. So I've blended those two. And if you look at my portfolio, business typically has value to their assets, something about what they're doing that money can't buy. So think of maybe a technology that they're ahead of the market on, or a team that might be better than is generally found out in the market. And so I find something that I believe is undervalued relative to how the market is looking at it, and then put on my growth guy cap and say, hey, how do I grow that business? And then try to add value to change the growth rate and to try to make it more of a logarithmic growth curve versus a linear one. And so looking for things I think other people will like at some point in time when it's bigger. And then I lean into it to try to help it grow faster with fewer mistakes and to be more efficient with whatever assets they have, whether it's people, capital, technology, what have you. So it's really kind of a hybrid between a private equity investor and a venture capital investor.
Oh, very good. Are there any particular industries that you focus on or like the most?
Yes, I definitely like early stage technology. Primarily, the technology creates change creates opportunity. And so if you're looking for ways to make unusually high or unusually high relative to the risk you're taking returns, technology is a good place to look. However, if you have a kind of a baseline foundation to that business, like I said, kind of an undervalued asset, you can get growth characteristics, yet have your downside protected. And so I'm looking at both protecting the downside and finding things that I think have above average growth potential. And inside of technology, I would say SaaS, software, internet, e-commerce, things that you're moving bytes and bits around more than actual hard products. Reason for that, probably twofold. Number one, you might have a recurring revenue component to the business model. Those gets valued by investors and potential acquirers at a higher rate. And then number two, when you're working with technology companies, you often, not always, but often don't need as much capital to grow the business. So they're capital efficient. So a smaller amount of capital on the front end can have a higher impact on the business on the back end. And then maybe the last piece of the puzzle is to buy it right. So if you invest at a overinflated price on the front end, takes a long time for the business to grow kind of into that valuation. Whereas if you buy it right, you actually kind of protect yourself because you didn't put your money in at an inflated price. And I have 4 kids, so it's kind of back in the day when your kids are growing so fast and you think about buying them bigger shoes because their feet are going to grow into it. If you invest at too high of a price, it takes a while for that investment to grow into it. And at a lower valuation, you don't have to have a crazy upside exit to return an above average rate of return. So if you're investing in low single digit millions of dollars at those valuations, you can exit at a $20-30 million exit and still do very nicely, as opposed to if you're investing at a $20-50 million going in price, then you got to exit at several $100 million to have the same kinds of returns. And that, I think, is just harder. So I'm looking for early stage, a valuation that is fair and one that I can kind of lean into, add value, and alter the growth rate so that it ticks up and, like I said, hopefully starts growing logarithmically versus linearly.
Oh, very good. How about any future trends, opportunities that you're seeing now that you're most excited about? And if so, how you position yourself to benefit from those?
Sure. So I think a lot of people get over enamored with cool technology, and I'm more of a pragmatic market approach guy. And if you have a product, even if it's not particularly sexy, but the customers like it, it's sticky, and it's a starting point that you can build a business on, I would prefer that, in that you're already maybe getting a little bit of traction with your customers. You can add to the offering. You can raise the prices. You tend to have a position that might be sticky and they're not going to move on to a competitor. I think those opportunities, in my opinion, for me, are an easier place to invest than trying to pick the latest and greatest technology. AI, for example, everybody's AI this, AI that. AI is a tool. The tool can help make a business better, but AI, for AI sense, doesn't add a lot of value. So you say, how is that being leveraged in the marketplace? Similarly, if you go back long enough, the internet, just because it was some internet-based company doesn't mean it's going to have a success story. So I, again, would be very pragmatic. An old investor told me, hey, the dog eating the dog food. And he also might have added son to that story. Son, why are the dogs eating the dog food? Anyway, so if the dogs are eating the dog food, it's sticky. They're not moving on to customers. You have a strong position with them. You're adding a lot of value. The value prop is high. I would rather invest in those kinds of companies versus just, I don't know, sexy technology for sexy technology's sake.
Yeah. You mentioned before we launched the podcast here, Brimacomb's in next month will be 20 years, the 20-year anniversary of the business. How about what have been some of the biggest challenges you faced in the business over the years, and how did you overcome some of those?
Sure. Well, all of us small business people know the challenges of trying to do a lot with limited amount of resources, whether it's number of bodies you have working with you, whether it's your budget and the amount of dollars you have to put at problems, or the old, hey, if you're delivering, you're not marketing, and if you're marketing, you're not delivering. And so those are probably some of the kind of internal issues. Externally, been around long enough that I've gone through a couple of market cycles. So the
Hmm.
economy's in your at your back, and the wind's at your back, and it's being helpful. Economy is not doing well, excuse me, and the wind is in your face, and it's challenging. So trying to deal with those. So as I look forward, I think we're going into a cycle that's going to be very attractive and pro business. So I'm excited about that. Dealing with some of the more internal things. I guess I've always tried to do things that I thought were going to drive business to me. So I did a variety of things so that I was trying to create a foundation that I was receiving inbound activity. So I would encourage all entrepreneurs, it's called a flywheel if you're reading a
Hmm.
bunch of business books,
Uh-huh.
to try to focus on your flywheel so that customers are coming to you and you're doing things that are attracting prospects versus always having to go out and hunt for a new one. So I've done that. So the phone rings. And then I built personally a almost a sales funnel with Club E at the top, an advisory practice in the middle. So Club E drives people towards me. The middle of the funnel, the advisory practice allows me to work with a entrepreneur or business leader on a kind of try it, you'll like it appetizer kind of basis, or hey, let's date before we get married. And then the investment vehicle, Brimacomb Capital, where I'm getting involved from an equity perspective. It's kind of like, getting married and making a commitment to a
Huh.
particular business. And so I have the, hey, here's just somebody I'm talking to. Here's an opportunity in the middle to get to know them better and work with them. And then down at the bottom of that funnel, I'm actually making that equity investment. So built a marketing funnel and an opportunity to provide an easy way for a business leader to get to know me, find out if they like working with me, and vice versa, for me to decide if I want to work with them, and then ultimately leading to an equity investment. So trying to make your offering easy for somebody to try you out, I guess, would be something that I'd recommend for others and has worked for me. And then also try to work through some process so that you're not trying to maybe ask for too much from the customer up front, whether it's commitment or money or duration or whatever. Just make it in bite-sized pieces so they can move through their own kind of internal process to get to know you and decide how much and how deep they'd like to work with you.
Yeah. How, as you're making your investments, how important is, I mean, the leader, the founder, leader, or the leadership team? How do you, balance that with the technology for a tech company?
Sure. I would way more want to have a B or C level technology and an A business leader than an A technology with a B or C grade business leader. So many of the CEOs I've worked with, I've kind of handpicked. I sought them out and said, hey, I want to work with you. Not that their business wasn't important, excuse me, or that their technology wasn't important. I just thought they were the kind of people that were going to have success. So I'm definitely a believer in you follow the people more so than you follow the technology. And then I think paired with that, and I brought it up a little earlier, valuation. If you buy it wrong, it doesn't matter how good the business leader is or how good the technology is. You can't make it up on the backside from an ROI standpoint. And ultimately, that's how all investors get measured is what's the ROI. And so number one thing I believe in would be the business leader. But again, you have to buy it right and put those two things together. And then I think that's a great starting point for making a good investment.
Yeah. I don't know, any techniques or strategies you use to try to buy it right, to evaluate that valuation and make sure you're looking at things correctly or
Sure.
as well as you could?
Sure. So, we could probably do another one of these on valuations and a
Yeah.
different way to do that. And if I do a good job today, maybe you'll invite me back and we'll cover valuations in more detail. But
Uh-huh.
at a high level, ask yourself the question, okay, 3 years from now, 5 years from now, if the business achieves what they think they're going to achieve, how much would it be worth then? What kind of multiples, who are the buyers going to be, how likely it would be to be able to sell the business. Are there going to be a lot of buyers? Is it in a category, for instance, that has a lot of private equity money in, and the private equity would want to roll that business up into one of their platforms? And so beginning with the end in mind is a great place to do it. Try to figure out what you think it'll be valued then, and then discount that back to today's dollars. Now, that's a
Mm.
little wonky in terms of finance, but to make it easy, let's just say you think you can sell the business for $40 million 5 years from now. To earn a reasonable rate of return, obviously, it has to be much less than $40 million. And a simple way to think of that is if you can make 5 times your money in 5 years, that's a 38% IRR. So if you don't remember anything but this from this podcast today, think about, hey, can I make 5 times my money in 5 years? That'd be a 38% IRR. That's a good way to look at it. And for what I do, early stage, you want to have at least that kind of level of return given the risk you're taking. And so for a business that's going to earn, whatever, say like bank level return. So you're going to put some money in a note and you're going to make 5% interest, but there's risk. That's not enough risk for that return. So,
Mhm.
so for early stage, I think about 5 times in 5 years, and then back to something I said earlier, valuation on the front end. You get in at a low price, heck of a lot easier to sell a business for 10 million, 20 million, 30 million than to try to sell one for 50 to 100. And so just be cognizant about where you think you might exit, who you might exit to, at what price, and then think about, hey, if we bring that back to today's dollars, what that might look like, and then just run it quick through that filter 5 times in 5 years. And if that makes sense and it holds together, and you say, hey, this has a decent chance of success, and I have a chance of making a good investment. And I think where things go wrong is most entrepreneurs overinflate what their business is worth. So they're trying to
Mm.
get the maximum valuation possible. So they're pushing up. Meanwhile, every dollar they push that valuation up, it makes it harder for you to have a return on the back end. And so use some of that kind of simple math, take out a napkin, sketch something out like, hey, what are the real chances I can make 5 times in 5 years? And if you can do that, then go forward and kick the tires on some of the other things, whether it's the technology or the CEO or whatever.
Yeah. How about when you make your investments? How involved are you? Do you always take a board seat or is it just write a check and step back? I mean, maybe it's different with each
Sure.
investment, but what's your philosophy around that?
So all these companies, especially early stage, they never have enough of blank. They never have enough people. They never have enough time. They never have enough budget. They're always trying to grow with a limited number of resources. And so I try to add value to those businesses in any way I can. On the front end, they need more support because there's more gaps in the team. There's just more things to do. As they mature and get down their growth journey a little farther, things become a little tighter. They don't need as much, and I can focus a little tighter on certain things. But I try to meet people where they're at. I try to figure out what they're asking for and what I think they need, and then blend those two things together.
Mm.
And so if the CEO's got 10 things on their to-do list, high level things, I might be working with them on 5 of those items. And some of the stuff I might do might be shaping go-to-market strategy, marketing. Sometimes I work with folks on developing their sales teams. If they need money, given my investment banking background, sometimes I'll go out and to market and help them with the fundraising. Not that I'm a professional recruiter like you, and I don't do that for compensation, but if somebody's trying to plug a hole, there might
Sure.
be somebody in my network that I can plug that hole with. Might be trying to get some press for a company. So I can also act as a financial officer, knowing my way around the income statement and balance sheet. And so again, I try to meet people where they're at, bring whatever skills, knowledge, contacts I have to move that company down the road. And again, looking to grow it faster, make fewer mistakes, and in essence, goose the growth curve.
Oh, very good. How about we talk a lot in the show about free markets, capitalism, and the show is called Capitalist Culture. How has living in America in a free market society and a cap, capitalistic culture helped you in your ventures and in your portfolio companies?
Sure. Well, you started the podcast today with family of origin or the origin story. Like I said, my father was a self-made man, came from nothing, did it all on his own, really lived the American dream. On my mother's side, they were also business people, and so focused on self-actualization and creating value to the world, and then capitalizing on that. And if you look at over time, why our company's been successful is in large part for creating a large middle class and having
Uh-huh.
most people doing well. It's creating the freedom for people to go off and do what they want, to self-actualize, to create value that somebody in the marketplace will pay for. And so I've watched my parents and grandparents as I was growing up. So going into business was a very logical path for me. Part of why I got started in the stock market is I was fascinated by the competitive nature. You have a winner and you have a
Uh-huh.
loser. And ultimately, every day you find out how things finish because you have a stock price going in
Uh-huh.
and then a stock price going out of that particular day. So I love the fact that there's a scorecard, there's winners, there's losers, you get measured, which of course then feeds into my business. And I tell people, in essence, I create something out of nothing with these early stage
Mm-hmm.
businesses. And it's very rewarding and fun and economically enticing if you can take something literally from nothing or a $1 million valuation and turn that into a $10 million valuation, $20 million valuation, $50 million valuation. And so I find that fun, interesting, intellectually challenging, and I love what I do. Keeps me energized, and haven't gotten to talking about, hey, what do we, what's happening going forward? But people might say, hey, are you going to retire? I'm like, well, why would I retire? Because I'm having fun doing what
Right.
I do. And reality every day is interesting and new because the world throws different variables at you and you have to adapt. And so I love the concept of value creation. I love the concept of free and open markets so that people can create things. And Americans have proven over 240 plus years that we're more creative, more inventive, more entrepreneurial, and have been able to have success across multiple different things, whether it's world wars or economic system or what have you. And that I think all goes back to our entrepreneurial spirit and the freedom to be creative and look at a problem, solve a problem, and then ultimately, win in the marketplace of ideas based on putting something forward that other people will value.
Yeah, absolutely. How about any ways that you advocate for capitalism and free markets, like maybe outside your direct business activities?
So I have done a variety of things in the nonprofit world over the years, and I think there's a place for that. And I have contributed in a variety of ways on that front. From the business standpoint, I've had entrepreneurs go out and talk to other investors, and other investors have said no for a variety of reasons. Often, other investors are looking, I believe, kind of superficially at what that particular entrepreneur is doing. And they say to themselves, hey, that entrepreneur doesn't have all the pieces to the puzzle figured out. Or, hey, this business opportunity looks too small. Those are probably two of the most common things that get said. Of the 11 companies that I've put into this particular portfolio, I was the first outsider in 10 of them. And so
Okay.
I'm willing to go in first and not really care much about what the outside world is saying. In fact, if the herd is saying, "Hey, this deal's too
Uh-huh.
small," kind of intrigues me as to, well, why are they saying that, and can I poke holes in that assumption? And in fact, one of my companies that's done quite well over the last handful of years, we're in the process of talking about an exit with a private equity firm, and it was just that everybody said too small, too small. I dug into it. It's like, well, they are in a niche business, but we can expand on what they're doing. We can add more to the offering. We can raise the price. The product is sticky. I kind of mentioned some of these things earlier. Products is sticky, so we have a very strong foundation, and we can build upon that. And then here's part of maybe a little bit of the secret sauce creativity. So I called an M&A buddy of mine, and I said, hey, here's what this business is doing. Everybody's telling them it's too small. My M&A buddy said, hey, you grow that thing for a handful of years, you can sell that all day long, because that category has a lot of private equity money in it, and they're going to want to roll it up into one of their platforms. So this particular entrepreneur got said no to by many people, mostly because it was too nichey, too small. I took the other approach and said, hey, that's a good thing we can build on. We've been growing 30, 35% a year for several years. And now we have private equity firms circling around and
Huh.
calling on a regular basis. And so again, if you buy it right, if you think about how you're going to get out, and is it a category that it has some logical buyers, that's a good recipe for business success.
Yeah, very, very good. How about turning back to capitalism a little bit? Any misconceptions you see in the market or in the world about capitalism? And if so, how do you address those or encounter those?
Okay, this might be podcast number 3 that Kip and Rick are going to do together. That's its own hour-long
Sure.
show. But at a high level, I think there's just a fundamental flaw to say that some ivory tower person in some capital city, whether it's Washington, D.C. or Mexico City or some capital in Europe, knows better than you do when you're the person feet on the ground in the market listening to customers. And so anytime, in my opinion, top down, somebody's telling you what to do, I just think that's a fundamentally flawed way to do something. And I think it should be a bottoms up. Like, what did the customer just tell you? They just told you they wanted a blue widget instead of a green widget. Okay, I'm going to head towards the blue widgets. That ivory tower bureaucrat does not know that, is never going to know that. And then you have people who are trained and educated in one thing, and then you think they think they can tell you about something else. So, for example, you have a lot of lawyers in government. Nothing
Mhm.
against lawyers; they're smart, capable, competent people. With that said, I don't want a lawyer telling me what to do about my business when they've never met a payroll. They have no idea how to add value in the marketplace. And so I think sometimes these are well-intended people, not always, but sometimes they're well-intended people. They just are trying to do things that are beyond the scope of what they know anything about. Just like you wouldn't go to a brain surgeon to figure out how to fix your car. Similarly, you wouldn't go to a auto mechanic to say, hey, help me with my brain surgery. So having a bureaucratic person do something top down, telling you what to do, fundamentally just doesn't make sense to me. And then the last thing would be where you're putting your investment dollars, your time, your energy. if the government is subsidizing that, it's not a true free market opportunity. And so if the government is distorting behavior, whether it's a business buying a product or a consumer buying a product, doesn't matter. The government is distorting behavior. That's not going to be a true indication of what's going on. And so a business that's relying on government subsidies or government protection by keeping competition out or keeping competition down, again, doesn't make sense to me. And I think over the long haul, that proves out that the government can't prop up an industry forever. And ultimately, the market dictates what's going to be successful and not. And the government is just A, getting in the way, and B, delaying the outcome of the inevitable, which is the best idea is going to win and the best value prop is going to win. And so I've always steered clear of industries where there's a lot of government intervention, and it makes it an easy way to say no to an investment opportunity. If you look at the business model and they're relying on the government propping them up, that's an easy out/no for me. And so I've been much more focused on B2B, a little easier to read than B2C. And then again, niche things where you can really get your arms around the value prop that the business offers. You're not maybe being interfered with by the government. And then, like we said, digging into some of those other things about the CEO and the tech and so forth.
Yeah. How about Club E? Top of your funnel is Club E, and well known here in the Twin Cities. Maybe tell a little bit about what is Club E and what does it actually do?
Sure. E is short for entrepreneur. Originally, I called it Club Entrepreneur. People started calling it Club E as a nickname, and I didn't come up with that. Speaking of how the market comes up with the best idea, the market started telling me, "Hey, Club E, Club E, Club E," and it took me a little while to have the light bulb go off. Well, eventually, I grabbed that name, and then just kind of a funny story. Just give you the real short version here. I actually got a cease and desist letter from Entrepreneur magazine.
Oh boy.
And said I was infringing on the use of the word entrepreneur. So little Rick from Southwest Minneapolis and his club entrepreneur got a nastygram from Entrepreneur magazine. So anyway, between people using the Club E nickname and getting the nastygram from Entrepreneur magazine, I flipped the switch, went all the way in on Club E. Anyway, what did we do? Well, a long time ago, I did it in partnership with the Minneapolis Club. The goal was to create little micro groups for the members at the Minneapolis Club. It's a way to get connection with other members and so forth. And back then, the Minneapolis Club had a lot to offer at a high level macro perspective, like hearing, say, the CEO of 3M speak or the head of the local Federal Reserve, a lot of macro business things, which are good, but ultimately doesn't drive business decisions for your average business person like me, like you, other people out in your listening audience. And so what I wanted to do was create something where people would go have a lunch, they'd learn from some other business person, much like what you're trying to do with your podcast.
Sure.
And I love what you got going here, and then go back to their office after lunch and actually do something different. So the whole intention was to educate business people and give them nuggets that would allow them to perform better. Been doing it since 2007. Got 450-ish videos out on the internet with various interviews I've done over the years, a lot of evergreen topics. So anybody who wants to go out there can check out either my website, brimacomb.com, or the YouTube channel. And the idea, again, was to educate people. And I think for the average business person, that's where most of the jobs in America are for the average business person. It's not up in the C-suite of the ivory tower. And so the middle part, the middle class of America is filled with people like you and I running our own businesses, growing our own things. And at Club E, I try to be supportive of that and try to provide content that I think other people would find valuable and to help them improve as a business person.
Yeah, no, very good. How about looking back, any decision or action you'd say has been most pivotal in your success thus far?
Good question. I think being adaptable and flexible, because as I mentioned earlier, I've gone through a couple of business cycles. And so you have to react to what the marketplace is saying. Pre 2009, 10, when the economy got real tough, I was doing more things that looked closer to an investment banker. And then raising money got very difficult in 2009, 2010. My market was lagging a little bit. The general economy started to get soft 07, 08, and into 09. And it took those issues in the business world to get to me more in 09, 010. So I had to pivot and got more involved in the actual growth activities of businesses one-on-one. So that was a pivot to me that was pivot for me, driven by the realities of the marketplace. And then another pivot was, rather than have a lot of clients where I was doing a small part of business with, I expanded my offering. So I added more value and to have what people call wallet share. So I tried to get a larger wallet share by providing more value and actually upping my value proposition.
Mm-hmm.
So I tried to expand and have fewer clients, do more work for them, add more value, and create more value. And if I was creating more value in the marketplace, then that would allow me to participate in that from an equity perspective. And so I flipped the switch to do fewer projects, fewer deals, do more for those companies, add more value, and then try to have a bigger piece of the pie that I was helping create. So that was a second pivot. And then I guess maybe a third one for some of the people out there. And I mentioned it earlier, is to try to create an engine where you're getting inbound activity.
Mm-hmm.
Clubby, I did just for fun, had no economic model. It was basically a little thing I did in partnership with the Minneapolis club. I did it for a couple of years, all of a sudden had kind of a following and said, hey, I can monetize this. So I sell sponsors. So I've monetized my marketing. So Clubby, I do because I like. It's fun. I love the lifelong learning aspect, just like you doing these podcasts. You have to get up the learning curve with people and with different topics. I love that part of it. With that said, I have monetized it. And so my marketing, not entirely, but a bunch of my marketing is now a revenue center, not a cost center.
Yeah.
So I've turned my marketing into a profitable part of my business. And so that's something that I think maybe other people out there might think about. Hey, how can I actually make money on my marketing, and how, like I said, create a flywheel to drive people to me? So if the phone's ringing and you're just picking it up and deciding, hey, good fit, yes, I want to work with you, or hey, wish I could work with you, it's not a great fit, but call my friend Kip. If you're doing that and you're not out trying to hunt on the hamster wheel every day, it makes your life a heck of a lot easier. And maybe a way that people out there can think about how they're trying to drive business towards them and what are they doing from a marketing standpoint. And maybe it's even possible for some of your listeners to flip their marketing around and actually get paid to do it.
Sure. How about any, that's maybe one slice, but any advice you'd give to aspiring entrepreneurs or founders?
Like a home improvement project, it always takes longer than you think, and it always costs more than you think. Playing off of words, the whole marathon, not a sprint. You think something's going to happen in 2 years, it takes 4. You think it's going to cost 50,000, it costs 200,000. Things always take longer than you think, cost more than you think. And then the more behavior you're trying to change of people in the marketplace, the tougher it's going to be. So if you offer up a better mousetrap or widget, and you fit nicely into a market, and the buyer, whether a business buyer or a consumer buyer, doesn't have to change a lot of behavior, that's going to be easier to happen than something where you're going to have to disrupt an entire way business is happening. And so thinking like, hey, what is this business model? Am I getting paid on the front end or am I getting paid on the back end? And how long is it going to take for actually this technology or service to work its way through the industry, and to not underestimate how, to the best of your ability, how long it's going to take, because then people run out of mental juice to make it happen.
Mm-hmm.
They don't have enough budget and they hit the wall because they didn't have the right amount of capital, et cetera. So understand it's going to take a lot of time, more than you think, more money than you think. It's going to be harder to move people, even if you do have the better mousetrap. And so I guess at the end of the day, one of the things I would look for in a CEO, and for your listeners out there, is I need to have a lot of persistence and I need to show a lot of grit in trying to address the issues that get thrown at me. And there's going to be a lot of issues. There's going to be a lot of days that entrepreneurs wake up and they're tired and they're discouraged, and it's a lonely journey.
Yes.
I know I've done it several times and I'm there with everyone. But just saying to yourself, hey, that's just how it is. It's part of the process. Tomorrow will be a little better, day after that a little better, and to just keep at it. And so just acknowledging that it's not an easy road and it's going to take time, money, and effort. And having that in mind will help people, stay on the path and, like you say, do it a day at a time, step at a time, et cetera.
Yeah. And I think these next 4 years are going to be the most pro-entrepreneur, pro-business 4 years perhaps we've ever had in the history of our country. Uh, any things you're thinking about, or strategies to evolve your business and really kind of capitalize on the momentum of what we have going here over the next 4 years?
Sure. So a couple things. I totally agree with you. I've been telling people now for a little bit, I think this could mimic what transpired in post-World War II,
Mm-hmm.
the late 40s, 1950s, where you had a wonderful economy, wind at the back, regulations going to go down, et cetera, et cetera. Capital markets are going to be supportive. There's all these indicators that would suggest that time is right. So what should somebody do? Put the gas pedal down, because you're going to have things happen that will be supportive, and you might not even know what it's going to be. But if you put the gas pedal down now, 6 months from now, something's going to happen, and that's going to help you on your journey. So don't necessarily worry too much today that you have all the answers or you have a gas tank full of gas. Put the gas pedal down, push forward, have a belief that things are going to be positive, because I think they're going to be very positive. And along those lines, why I can say that is that it's only been, 6 weeks since the election. And I think the private equity market was sitting on their hands with a lot of money on the sidelines, and they're coming forward fast. So in my little portfolio, I have two companies that the private equity universe is circling around hard. And I have two friends who have businesses, software technology businesses, that the private equity world is circling around those two. So in my little orbit in Minneapolis, I know of 4 stories where the private equity firms came out with this attitude. They're going to hit the gas pedal. And I think that's indicative of what is going to happen. And so if you got chips, put them on the table now. Push forward. Again, you don't have to have all the answers, because sometimes the answers become apparent as you move forward on the journey. I definitely would be aggressive if I was a business person out there listening to this, as I'm trying to do with my portfolio and my own activities. I think things are going to be very, very good, and looking forward to participating and looking forward to seeing how it unfolds.
Yeah, absolutely. How about we'll end with success for you? What does success mean for Rick? And you can take that any way you want.
Sure. Well, obviously everybody's got their own definition of success. Um, People's lives are never perfectly in a line for the right time to do this or to do that. Whether it's, hey, is it the right time to get married, or is it the right time to have kids, or is it the right time to take this new job, or is it the right time to launch a new venture, or is it the right time for whatever? Um, I think success for me has been that I made some tough choices on decisions that frankly were hard and took a long time to push through them. But as I mentioned in an early answer, having a strong sense of perseverance and grit allowed me to work through things. And so I think some of success is defined by doing what you want to do, what you think your calling is, and to have self-actualization and the autonomy to go do that. So for me, doing entrepreneurial things has always been important. I was doing it when I was a early teenager, and so having the freedom to do what I want to do from a work perspective and to pursue what I think is valuable is part of that definition. And I think probably would be the same for a lot of people in your audience. Another part of success, which has been very important to me, is I have 4 children, and I was able to be the father that I wanted to be to them because I had picked an entrepreneurial path.
Sure.
And so I got to go to everything, and I got to pick them up at school, and I got to drive them here and there, and I got to go to those tournaments. Now, in between games or in between recitals or in between being a chaperone or chauffeur, I took my phone and went in the hallway and made a quick call or sent an email or text. And so my world has been blended in that manner, but I was able to have the personal life that I wanted to. So freedom on the front end to do what you think is best, matching what you're doing with your personal life, and trying to have balance is an overused word. I'm not sure there's ever perfect balance. It's probably more finding time to do the things that are most important to you. And I found time to do my business, and I found time to be a dad, and or maybe made time more than found time.
Right.
And so those two things. And then lastly, COVID taught me, we could work from wherever. So I'm here in my house today. I learned I could go up north for the summer, bring my computer and work from up north. I have a buddy in Mexico City. I learned I could go to Mexico City, bring my computer and my phone and work down there. So I've become much more mobile since COVID as a worker. Not that I was ever chained to a desk. I wasn't, but I've become more mobile, and having the flexibility to work from wherever, whenever, which then goes back to your personal life and allowing you to do what you wanted. So I think it's a mix of having autonomy, having the personal life that you want, and then having the flexibility to work how you want, where you want, when you want, and matching all those things up. The making money, I think a lot of people get off track and they put the money first. And I think then that ends up not leading to fulfillment, and people that might do what I defined as success first, the money will follow because you're doing good work and you're adding value, and you're doing it because you want to from a very authentic, personal space. And so the money follows. The money is a scorecard. And so I definitely would encourage people, and I've done this with my kids, not to do something just because you got paid an extra dollar over here versus an extra dollar over there, and do things that you find interesting and touch a creative gene in your body. And if you're doing those things, the money will follow. And so for me, those would be the key points of what success means. And no interest in retiring. I love what I do. It's fun to work with people like you and creative entrepreneurs, and that's energizing to me. And so it always was a little bit tough for me to understand, Bill, I can't wait to retire. And I get
I
that
know. Yeah.
in the sense of you can travel. But on the other hand, if you're doing something that really kind of speaks to your soul and energizes you and feeds you, then why would you stop doing that?
Right.
And so I've encouraged my kids to do things that, cause them to get up in the morning with a bounce in their step and a sense of curiosity. And those are some things that are important to me. And I think it shows up in my world. And I know it shows up in your world too. And that's why you're doing this podcast. And again, thank you for including me. And we put a couple of other topics on the table. And
Sure.
who knows, maybe if I did a good enough job, you'll invite me back.
Yeah. Well, good. This was fantastic, Rick. I really appreciate it. Absolutely incredible. And we'll share all your socials and the websites and everything so people can get a hold of you and Clubby and Brimacomb Capital, the whole thing. But again, I really want to thank you. This has been educational, fascinating, exciting, and resonate with you on so many levels with what you've talked about. And even before we kicked off the show, we were chatting. I really, really, really appreciate your time so much, Rick. Thank you.
Thank you.
All right.